There you have it, a closing bell at the New York Stock Exchange. We saw some veterans there ahead of Veterans Day, clapping along. And boy, do they have something to cheer about. Take a look at this. A very strong day for the markets as investors react to the lower than expected inflation numbers. The Dow up almost 1,200 points.
Yeah, look at all that green, like a forest there.
Right.
The S&P is up more than 5%, while the NASDAQ is out about 7%. Let's bring in John Leer. He's the chief economist at decision intelligence company Morning Consult. John, look at this. Tell us, because this initial reaction, is it to the CPI numbers? Might it translate to an extended period of optimism on Wall Street? What's behind it?
I think today was certainly a good day in terms of inflation in the U.S. The reading came in much lower than folks had expected. I think probably some of what we're seeing on Wall Street is a reflection of investors expecting the Fed to take their foot off the gas a little bit. I think it becomes more and more likely that the Fed moves to 50 basis point hikes going forward. And I think some of what we're seeing again in the equity markets is, again, just sort of repricing based on those new interest rate expectations.
I'm also curious about the role politics and the midterm elections had on this. On Monday, there was a rally on Wall Street ahead of an expectation that Congress would be split. There'd be gridlock. There wouldn't be any new laws really passed. I'm oversimplifying. And then when it was apparent the Democrats were kind of gaining more than expected, there was a pullback. How might the election picture and the expectation that the Fed's meeting in December may also increase interest rates once again play into this mood of optimism we're seeing right now?
It's not totally surprising that we're having this level of sort of volatility surrounding the election. And in fact, we're sort of seeing similar levels of volatility in some of our consumer surveys around inflation expectations and consumer confidence. I think investors and consumers alike are trying to assess the economic environment right now, and the midterms just add an additional level of uncertainty to what's otherwise, already a fairly uncertain period. I wonder, I think unlike historical episodes where, you've seen a lot of a sort of a post-midterm boom, I think right now sort of reality is likely to set in, and we'll go back to thinking about the underlying economic situation in the U.S., which again, I do think is fairly concerning.
Well, John, the labor market has remained strong despite the Fed's interest rate hikes. Given that we're seeing a better than expected CPI and inflation's coming down a little bit, is it possible that we might avoid some of the bad, I don't want to say worst case scenarios, but some of the recession talk that we've become accustomed to? Are you concerned, though, that we might still see an economic slowdown, a recession, et cetera, in the near future?
I'm still very concerned about the U.S. economy in early 2023, probably the latter half of the first quarter and the beginning of the second quarter. I still think a recession is more likely than not. But the data that we got today is rather encouraging. And if you take sort of today's reading and you look, project it forward and you assume that the Fed takes its foot off the gas a little faster than we had expected, that does change the outlook.
Well, I'm hopeful. I'm optimistic.
Yeah, we hear that you're referencing some concerns, but it's one of those data points today, at least, very strong for the trading on Wall Street. John Leer, thank you very much.
Thanks, John.
My pleasure.